Great. Well, welcome to our April virtual Women in Platforms. When do you think we'll get back together face to face? Sam, Gillian, September? Yeah, we'll have a Women in Platforms at the Platform Awards. We have Georgia Stewart, the CEO and co-founder of Tumelo. I think I've got that pronunciation correct. I think of it as a bit like Pomelo, Tumelo. Which is a really exciting platform to drive shareholder engagement, but I'm not going to tell you about it. I'm going to let Georgia tell you about it. Georgia, can you introduce yourself and tell us a little bit about Tumelo?
Yeah, sure. Thank you, Heather. Yeah, Sam and Gillian, thanks everyone for having me. Obviously, my name's Georgia and I'm Tumelo's CEO. Yes, I say Tumelo, but everyone says it differently. This should have checked before naming the company, but anyway, here we are. So I guess my background is quite short. I went to Cambridge and studied natural sciences, where I became a bit obsessed with sustainable finance. And initially we were using the university endowment to we're looking at the university endowment, which was large, it was £6 billion, and we were trying to work out how we could make the university a more proactive shareholder. So we wanted to know, where are the university funds invested, what companies do they have, and how are they voting? You know, when it comes to Exxon, Chevron's AGM and there's a big climate vote, is Cambridge Vote pro-climate or against climate? And that was kind of the questions we were asking ourselves at that point. And so Tumelo is kind of a reincarnation of that in fintech form. We are aiming to give retail investors and pension members more transparency over where their money's going when they make an investment into the stock market through an ISA or a SIP or a DC pension scheme. And once they've got that transparency, we want them to have more of a voice in how the companies their money is funding are being run. Specifically, we're obviously coming from a place of sustainability, but we cover all angles. So some of our users are super interested in gender equality or human rights, in plastic pollution, employee representation. Obviously, the issues are vast and the companies are huge, so they have an impact on the environment and communities around the world. So yeah, that's essentially what we're doing, is trying to create transparency where there isn't much at the moment, and trying to give people a voice who are pretty small investors but make up a really huge amount of assets when you add them together.
Great, thank you. I'm going to try and share my screen. Oh no, I can't. I'll do it later, Hannah, if you wouldn't mind letting me, because this issue hit the big time. So I was out for a walk on the weekend, and just around by our local pub, the wall had been covered in these posters about like activism in environmental issues, and there was 4 things that we were supposed to do, and I'll share it in a minute. But the last one was to divest your pensions from companies that own fossil fuels. And so you may think this is a niche topic, people's interest in understanding what they hold in their pension and being involved in having a voice on it, but it's hit the mainstream in Putney, and it's all over the Putney Rail Bridge and our local pub. But I'll share that in a minute. You have recently done some work with Aviva. I think that's been announced, some work that you've done with Aviva, and they did a really, really interesting survey of their customers. Are you happy to talk a little bit about what they found? I mean, I have the press release up here, but are you happy to talk about that, Georgia, and how that ties in with what you're doing and how you engage people in these topics to engage them in their pensions?
Yeah, I can. I'm worried I'm going to get what they found in their survey wrong, but I guess they've all done surveys. I think overall, seemingly, the people are really interested in performance, which is to be expected. They're really interested in what their saving outcome is going to be, and that is kind of always the case, almost no matter who you ask. Apart from maybe we have this group of users we call the social drivers, who will kind of take a hit on performance just to do the right thing, but I think they're still a relatively niche group. So that's something that I think came out of the Aviva survey, certainly, was that. But at the same time, that people really did want to prioritize climate change, and they really did want to prioritize ESG issues, and they were interested in investing in renewable energy. And certainly LNG have found pretty interesting information from different demographics about kind of how different people are interested in different issues. So I think, you know, Emma Douglas talks about the survey they did where they found that women in the later half of their career were more interested in gender equality than other demographics, and I guess you can imagine why. But being able to kind of play to some of those ideas and think, okay, like these different people are passionate about different things, and if we're clever about it, we can give people a voice on the things they're passionate about, and that's what is going to engage them at the end of the day, much more than kind of you know, maybe your standard pension activities will at the moment, which are obviously quite admin based. And so I guess that's, I don't know if that kind of speaks to the findings that you're talking about, but that's really what Tumelo is based on, is that idea that you've got different demographics interested in different things, and if you can play to that, then you can be successful in engaging them.
I think it's a really, really interesting point, and it's something that I mean, most of the people in this group are more focused on retail than workplace, but there's obviously a huge amount of, because every advised customer also has a workplace savings pension, right? So the distinction is a bit meaningless because it's the same person at the end, right? And I think one of the things that stood out for me from the research that Aviva did, and you hear this all the time, is the degree to which people are pretty apathetic and about their pensions. Most people in the default fund, and the level of engagement is really low. And anything you can do to engage people actually results in better outcomes. And this is just one more thing that we can do to help engage people. So I think it's really exciting, and times with a lot of the things that we talked about in this group. In terms of, so you've talked a bit about the founding story. I mean, I think the ambition for shareholder engagement, I mean, do you think, I guess there's probably some skeptics. I was a bit skeptical when we first talked about this, because I was like, really, but if people won't even get out of the default fund, are they really going to vote their shares? And I'd love to hear a little bit more about your ambitions for shareholder engagement and take up, and what your views are around that.
Yeah, so well, I thought I could share my screen really quickly, because maybe this, I don't know if this is the same thing as what you're talking about, Heather, but this was shared today on our Slack by someone, which is a poster in Bristol at the moment on the back of a bus stop, which is basically taking HSBC to town on their fossil fuel investments, and saying, like, you know, by 2050, we intend to reduce funding for fossil fuels that will kill 100 million people by 2030. So obviously it's super activist. But I guess the point is that it feels as though this is really moving in a kind of more mainstream direction. And while we certainly, whilst we were at university, were pretty niche, like we were a tiny group working on a very obscure problem, which was lack of transparency and shareholder engagement and voting. Whereas like it's going mainstream, both in terms of the way consumers are thinking about it, or at least the way activist groups are trying to appeal to consumers. So you've got Make My Money Matter, for example, who are really looking at where are your savings? Are you invested in companies that are part of the transition, or are you invested in companies that are really stopping us from being successful in kind of reaching sustainable outcomes? And then also you have regulation going in that direction as well. So increasingly fund managers have to be transparent to their trustees, or to people who are kind of stewarding money on behalf of investors. And those people increasingly have to be transparent and ask the right questions of underlying investors. So whether you're an IFA and you have to start asking about ESG, or whether you're a trustee and you need to take climate, carbon footprinting into account and report to your pension members on that, either way, it's really moving in that direction where you have to be more transparent and you're expected to report. And it's going back up. So as a trustee, you are expected really to take the beneficiary opinion into account, or at least to kind of understand their preferences, even if you choose to ignore them. And as a fund manager, the Stewardship Code and UNPRI both reference the beneficiary opinion. So like, what do your underlying investors think? And up until now, that's kind of, you know, you don't have to tick that box when you fill in the UNPRI application, but there's increasing pressure and more focus on it. So I guess, will you be successful? Will we be successful in engaging consumers? I suppose what I think works really well is the ability to take quite a simple concept, you know, like a quite simple problem like climate change or gender equality, something people can really associate with, tie that to a famous brand that, again, people really associate with, And then, you know, you've got something that's pretty engaging for the average person who maybe doesn't care about finance. And that's where I guess activism campaigns have been successful, is, you know, if you can make them really simple and boil them down to things that people care about and can associate with easily and quickly, then, you know, they can really take off. So I guess, you know, obviously I wouldn't describe us as an activism campaign most of the time, it depends who I'm talking to, but I do think there are elements of that we are trying to play to, and we're trying to kind of awake the emotional in someone, and it is working. So we're engaging, you know, 20% of the workforce if we launch with their pension, which is in pensions pretty decent numbers of people to kind of register for a new tool and actually engage with it on an ongoing basis. And we expect in the retail space, although we don't know 100% yet, that number will be higher, because, you know, on an app, and it's closer to someone's every day. So yeah, I guess it seems to be working. And also now that we've been up for a year, I mean, we've got that past history that we know the engagement is maintained, because that was something in the beginning, which was obviously a question, was, will people vote once and then not come back? But we're able to kind of create that feedback loop where someone feels like they actually are having their voice heard. You know, their fund manager is looking at their preference, and they are able to actually impact some change through the savings that they've got. And I guess that's important for motivating someone to come back again and again.
That's a really high level of engagement, 20%. To be, did I hear that right? That the level of engagement with retail investors you're hoping for is 20%. That's
well, with pensions, we're hitting like 20% of a workforce registering. So hopefully in retail will be higher, I think. I mean, it depends. Like with the way that it works on a retail platform, we basically, our APIs integrate into the app. So you don't really have to register. It just becomes part of your app experience. So if you're on an investment app and you've got an ISA, the idea is that you just kind of get a notification like, hey, you're invested in Lululemon, there's an animal welfare vote coming up, what do you think? And then you can just, you know, ping and off it goes. So it's much easier user experience. Whereas in pensions, and Sam Croy talk all about this, obviously the technology is a little bit different. So people have to register for an account, so the user experience is a bit more clunky. So actually someone's just mentioned Jill, and so we do a bit of work with the big exchange, like helping them to provide transparency to underlying investors. So yeah, it's I guess our aim is to work with all of those platforms and kind of improve engagement and drive transparency, especially I guess for those that are built on the concepts of sustainability, like the big exchanges.
Yeah. That's fascinating. It's I mean, Elaine, I'm looking at you, but you can't tell. But because I'm thinking of investment trust businesses, and I sit on the board of an investment trust, and we really would love for people to vote in our AGM for the things that they're allowed to vote. They have the right to vote. They count. They're taking. It's actually their legal right to vote, and for them to be able to see that in the platform. So anyway, a side idea for your business would be to be able to work with some of the D2C platforms to encourage shareholder voting for investment trusts. Elaine, I don't know if I think you're nodding, but it's almost, I have a YouInvest account and I find it really difficult to figure out how to vote my shares.
Yeah, it kind of depends on the platform. We certainly can take the information back. So when there's information, when the platform sends it to us, we can apply it to any of the investment trusts. In fact, any of the OICs, if they choose to vote that way.
Yeah, so the information is taken by the managers, but for the end customer, it can sometimes take quite a bit of commitment to try to find out how to vote. So that API link that you talked about would be fantastic.
I guess that's like direct voting, right? So in most, if you're investing, I guess through like Free Trade or Hargreaves Lansdown or whatever, and you own direct stocks, then technically you have a right to vote. It might still be difficult to make that happen, but you at least have the right. So if you follow the chain long enough, you could probably get your vote to the company. But what we're really looking at is people that are indirectly invested in companies. So they have funds, they've got hundreds of companies in them, they've got no idea what's in there. They don't know votes are coming. They don't know what problems Lululemon's facing. And we're trying to give them a voice on those issues. So they don't have a right to vote, but we can pass their preference to whoever is making those decisions. And that's really what Tumelo it does. It takes all of those opinions from like the millions and millions of indirect investors and feeds it back to fund managers who are actually making the decision on you know, how am I going to vote on this Lululemon animal welfare issue? And fund managers at the moment, you know, they're not obliged to vote with underlying members, but it's useful for them to get the insights from customers at the end of the day, and we report back to those customers on what the fund manager has decided to do. So we kind of have that information around, okay, how are your values being represented by the people who are managing your money, and just building transparency into that process. But it does, I guess it does also work with direct investments, but I guess for most of our users, they're in ISAs and they're in they're, I guess, a little bit, they're not stock traders, I guess, on for the most part.
Yeah, so it was
Can
just
I ask a question?
Yeah, of course. And I should mention, if anybody has any questions, you can just put up your hand or say like Claire has, or pop them in the chat and I'll come to you. Claire.
Yeah, so I was just trying to I just wanted to play that back because it sounds like quite a complicated concept. So I was just sort of trying to get my head around it. So effectively, like your example, Lululemon has some issue coming up. So you identify the issue that could be voted on, and then you try to connect with people who've registered as an interest and say, hey, there's this issue. Do you want to do A? Do you want to do B? Like, so you try to boil it down to give them like two options.
Yeah, so it's I guess it's a bit simpler than that. I haven't explained it very well. Sorry, I gave you the high level, like, oh yeah, we have this concept, and then not actually how it works. But yeah, essentially, at every listed company, so like Lululemon has an annual general meeting every year, and at that annual general meeting there will be certain proposals will be voted on by all shareholders, so people who have a direct holding in Lululemon. What we are doing is taking the decisions to be made on that proxy statement and pulling them in to a pension member's experience. So we're not making up the topics, they come straight from Lululemon's proxy statement. So that animal welfare example is a real example. Another one would be like Coca-Cola's AGM is at the end of this month, and there's a question from shareholders saying, you know, we would like Coca-Cola to report on how its sugary drinks affect public health. And so we're pulling that question through to pension members and saying, you've got Coca-Cola in your portfolio. What do you think about this issue? Because your fund manager is going to be voting on it in 2 weeks' time. What would you like them to say on this topic, on sugary drinks at Coca-Cola? And that's where we pull through the opinion and then feed it back to the fund managers, who are actually, they're the direct shareholders in most cases. And they're the ones that are placing the vote at Coca-Cola or at Lululemon's annual general meeting.
So you're going to the fund manager and saying, we've got 50 people registered who represent 5% of your fund holdings. They want this and this, and you give them that information, and then you see what the outcome is and feed it back.
Yeah, exactly.
Got you. Thanks.
Sorry, totally left that up for debate. I had not covered that off. More questions? Heather, do you want to?
Sorry, I was muted. There's a few other questions about how it works, but can I just clarify something that you just said? How are the questions put to shareholders decided? Because there are, I mean, at the end of any given quarter, there's a huge number of AGMs and a lot of questions that could be put forward to proxy votes. How is that decided? Which ones are put to your members?
So we try and be objective about it. We cover the S&P 500 and the FTSE 250 in terms of the companies that will pull proposals forward from. So if you're a really obscure company in Japan at the moment, you get ignored by our system. So it's imperfect, but that's where we are. And then the proposals that we take are shareholder proposals. So we don't pull through, well, for the most part, we don't pull through director re-elections or like auditor elections. We will pull through proposals that are put forward by external shareholders, which, at least in America, they've been put forward by the shareholder. They've gone through the SEC, so some kind of rigorous system. So they tend not to be like rubbish. They tend to have been thought through, or at least kind of someone's had to go through the effort of submitting it, which takes about 4 months, and they probably need a group of shareholders because they need to own enough of the stock to be able to submit the question. So I guess for us, we then put all of those on the platform. So there's actually not that many. Like the number, I guess, if you're in a, I don't know, if you were in a kind of default pension fund with one of the big DC providers, you maybe would have had 300 things to vote on over the last year across a range of topics. So it's not unmanageable. You wouldn't vote on everything. We've got like a filtering system so you can focus on what you're interested in, focus on climate change or gender or human rights, ignore all the stuff on employee representation if you don't care about that. Like that's, I guess, probably the type of volume that we're talking about. It's not thousands and thousands.
Okay, great. Helena, you had a question about whether this applies to passive funds. So I can't see. Do you want to ask that question?
I think that was sort of answered earlier. I just wanted to understand the mechanics of how you actually work, but I'm interested in how you actually get that out to the fund. How does this actually get communicated to the members? How do they become aware of it?
Yeah, so I think it might be easier just to really quickly show you. So essentially, so Sam, I feel like you've been through this before, I'm sorry. But essentially, this is what the platform is for a member, and they get invited by their pension provider. So we would, if you're a pension member or a retail investor, we get the information about where your investments actually are from your investment platform. But you will have signed up to the service, so it's all like data privacy is all good. So you might be in a different array of funds of different proportions. We will then pull through all of the underlying holdings data according to those funds. So you can see, okay, over my whole ISA portfolio, these are the companies that I've got in underneath there. You can check out any of the companies if you want to know more about them. And then this is the voting piece, is where we pull through from our system any of the votes associated to your companies. So you're only getting asked questions on stuff you've actually got in your portfolio. We will, like as you can see, there's a categorization at the side, so you can like pick industries or categories you're interested in, and then you can like jump into an issue like this Walmart plastic bags issue. Shareholders basically saying like, we include both arguments from the shareholder and from Walmart. So basically, shareholder, this information submitted with the shareholder proposal. So we're just taking it from the proxy statement. But the shareholder's saying like, all your competitors are already doing this. We think this is a material risk for you, like it's reputationally damaging. And Walmart's basically saying like, we already do a ton of stuff on environment and this is not a priority for us. It's going to cost too much for the business or whatever. And then so you've got two sides of the argument. The member or the retail investor can then be like, okay, this is how I feel about this issue. It's obviously my money. I'm thinking in relatively rational terms. And then we pull through the results. So someone can see, like this is Dollar Tree, or there was TK Maxx there as well. So someone can see, okay, this is what I said. This is what other people in my pension fund thought. This is how my fund manager actually voted at Dollar Tree's AGM on this climate issue. And we also include a statement from the fund manager to say why they voted that way. And then this is the final outcome. So we can then ping people like an email or a notification if it's in an app to say like, hey, thanks so much for being involved in the Procter & Gamble deforestation vote. Your fund manager said this, and this is a positive outcome as it was in October. Procter & Gamble are now going to have to change how they set up their supply chain to protect forests. And so that's like the type of information we can then, I guess, give to someone to show them that their savings, although hopefully very long term, are having impact like now. That's, I guess, the point of the platform, long term anyway.
Alan, I see you have your hand up, but Amanda did before, I think. If I could just come to Elaine first, because it's another question about the mechanics and how it works, but from the other perspective about, Elaine, do you want to ask your question about how the information gets to the fund groups?
Yeah, it was really just how does the information flow back to the fund managers? How do you know how many to tell them how many people have said they want to vote in a certain way?
So we just send information straight back to stewardship teams at the moment. And it's normally in a spreadsheet format, which is how they want it. And we'll send through the number of investors that have voted a specific way. We include like the write-up of the vote so they can see how we might have interpreted it, and they can see like how their investors are voting versus the benchmark as well. So I guess we try and include some information about how the values of their cohort may be different, and then how they're voting on issues like human rights and gender equality kind of at a higher level. So ideally the fund manager can start to think, okay, I'm actually really out of sync with my investors on the climate change issues, but I'm pretty in sync when it comes to gender and human rights. So maybe I want to think about how I'm addressing climate change, for example. So we try and send it. It's basically an insights to the stewardship teams.
Okay, because on occasion, we can have different funds that hold the same thing,
yeah,
in different ways.
Yeah, exactly. So I guess
the same way.
Yeah, so I guess in the example I showed you, it's only one fund manager, but obviously people might have lots of fund managers. And in that case, I guess for a trustee, it's also quite useful. Hopefully, we're building a trustee dashboard at the moment, but the idea that they might have fund managers who are meant to be doing obviously stewardship, but potentially voting in different ways, I guess is something that's interesting for them to know. So yeah,
I'll go and work out who's getting the information.
Yeah.
Great. Amira asked a follow-up question to that. If there's any action that you have seen being taken based on the feedback you've sent through to fund managers.
Yeah, good question. I guess we're definitely seeing fund managers engage with it, which is great. Not all of them, I have to add, but a lot of them. There's definitely some really progressive fund managers we've been working with, like Elgin, use our data all the time and they think it's really important. And obviously we represent quite a small cohort of their total investor base at the moment as the largest asset manager in the UK, but they are splicing and dicing our data every week when they have their stewardship conversations, looking at, okay, over the last week, what can we see? How has that changed trends? And I guess they're looking at it from a product perspective, from a stewardship policies perspective, and also on a specific vote by vote basis on occasion. I don't think at the moment they're using it to decide how to vote every issue. Firstly, I think we don't represent enough of their membership base. We only launched a product last June, so we have quite a lot of growth and ground to cover in terms of representation. But also they're experts, so I guess they're pulling in data sources from their own proprietary research, from ISS, and also from our insights in order to make their decisions. So we're one piece of a bigger picture, and I think we have to respect that. In terms of impact, it's kind of hard to draw a direct line between this is what our members voted on our platform and this is the outcome at Procter & Gamble. But I guess for us, if we're making investors at Elgin more aware of how progressive or not their underlying investors are, and they're thinking about how they vote on these issues, that's significant, because places like Elgin or Vanguard, they own 12% of some of these companies in the US, and they are defining the outcomes and the trajectories on lots of issues, but obviously climate being an important one. So if we can kind of hold asset managers a bit more accountable and have them thinking twice about how they vote on things, because there's going to be a response, and they're going to be kind of in the public eye, and they're representative of their investors a little bit more directly than they were before. That, I guess, is the impact that I hope that we're having. Hopefully we can have kind of more concrete information on that. Ideally we look back and we're saying pre-Tumelo, post-Tumelo, but I guess we don't have enough data yet to do that.
Oh, it's not even a year. So, well done so far, but I love that ambition. Amanda, if I can come to you now, please.
I wanted to ask about the 20% engagement figure. Obviously, I'm interested in that in my own role. Is that based on people that are already engaged with their pension, which you would expect, or have you seen an uptake from people that have previously not been interested? Are you able to slice and dice the data in that much detail to see if this is actually getting people interested and engaging? Because obviously you will have a certain percentage engaged.
Yeah, so I mean, that's a good question. I mean, we're seeing the workforces I'm talking about where we're getting 20% engagement are relatively distributed. So I'm not talking about a legal firm of 500 people where everyone's going to open the email. I guess supermarkets, banks, that type of organization where people are kind of in different departments, and we're relying quite heavily on, I guess, that communication spreading to get people to register. But I think there's evidence that we're engaging people who wouldn't otherwise engage. If you compare like, for example, the number of people or the percentage of people who would respond to a survey on ESG, you know, maybe you're getting 1 to 5% of people responding to one of those surveys, whereas we can have 20% of people register. But where I think I see proper like long-term promise for us is organic growth. So people discussing it within an organization and sharing it after the registration event, because inevitably at the registration event, if you open the email from the pension manager, you're already a little bit more engaged than other people. If you then click on that link, you're probably a little bit more engaged than everyone else. But if that person then sends it to someone who didn't do either of those things, then we've got that person who was definitely disengaged, engaged. And that, I think, is really a good potential for us to have that organic growth over time. And we are seeing that happen, where colleagues are forwarding each other like notifications on the outcome of the Tesla human rights vote or the outcome of the Procter & Gamble deforestation vote. So I guess initially, yes, I think we're reaching people who are not engaged. Over the long term, I definitely think we can do that through that kind of referral mechanism.
I've just got one more question to do with engagement. And is there a certain age group that's particularly interested? Because obviously there's a view in the industry, there's a certain age group that are interested.
Yeah, so I feel bad kind of confirming stereotypes at this point. We are a digital product, so that's something to bear in mind. So you're already gonna be like, so it's not necessarily interest in ESG, I suppose, but it's that combined with digital. We have got majority, like I think 35% of our users, which is the largest single percentage, are in a 24 to 35 age group. But that leaves quite a long tail, like 65% of people spread over the other age groups. So we've got 10% of our users are in the like 55 to 65 range. And obviously it's going down to there. So we still have quite a spread of individuals.
That's good. That's good, because more needs to be done in the accumulation space. There's quite a lot being done at the retirement lead. And so that's good if it's engaging people in accumulation. So no, thank you.
Sorry, the financial lives study from the FCA. Sorry, this microphone is so anyway, I'll stop complaining about it. It confirmed that there's just widespread awareness among consumers about this, and it's not specific to any age group. The only thing that we did see was that it awareness increased in higher wealth bands, but the highest wealth band that they have in their study is £50,000 plus of investable assets. So it's not massive amounts, but it was 81% of people with over £50,000 of investable assets had heard of, I think the term they used was sustainable. I can't remember sustainable or responsible, but it wasn't ESG, but it was a bit that approach to investing, and 16% had said that they invested in that way. And the financial lives study from the FCA is a really large study of a large number of people, so credible data. Alan, if I can come to you next, please.
Thanks, Georgia. This is brilliant. You've achieved so much in a year. I think this is really, really great stuff. I've got about 30 questions written down here, but you're pleased to know that you've answered about 28 of them. So for me, the biggest question here is understanding the link between the action the fund manager takes and the data you gather. And especially the fund manager knowing that the person who's asking him to do something is actually a beneficial investor in the fund, because the OIC structure doesn't have a direct share register, and it's usually acquired through some form of nominee or custody structure. So how does he know that it's just not 50,000 activists that don't like Amazon that have decided to join your system, but none of them are invested in the fund anyway? How do you bridge that gap?
Yeah, well, it's a good question. We initially started out thinking we'd be a direct consumer platform, and so we actually built a kind of direct consumer website, basically, where someone could come and they could say that they're in the HSBC fund here, and then they could vote on an issue. But I guess we had two main challenges with that. One was we couldn't verify anyone, But the other one was that no one knew where their money was invested. So we'd have lots of people be like, that's a cool idea. And then they'd get there and they'd be like, how do I know where my money is? And why don't you know where your money is? But hey, no one knows where their money is. So that was a kind of an initial huge barrier to doing anything direct to consumer. So we had to do a bit of a 180 and start working with investment platforms, kind of linking with them so that we could get information about who was who and who owned what in terms of the underlying funds. And actually it turned out to be a great idea to do that because they all wanted to increase engagement, which had never been our initial, that wasn't our aim. Our aim was about, how to get people to care more about sustainable investing and stewardship. But actually, when we started talking to the investment platforms saying, we'd love to work out how to access your people, they said, oh, well, actually, we'd love you to engage our people. And obviously, it didn't happen quite like that, but basically, that's where we ended up. So we, like if we're launching with a scheme with Legal & General, then they will tell us this is who the scheme members are, and well, they'll tell us this is where all the scheme members are invested, and then people get unique links that means that when they come through the platform, we know that it's them, and they then are basically a verified kind of shareholder of that fund, if you will. The more integrated we can be, the better in terms of like verification that someone is who they say they are. So in the example where we're integrated with an actual kind of, retail investment app where we're actually embedded in because the tech is a little bit easier, then we have a proper investor account and that person is verified and no special link, it's just automatic. We know that they own X, Y, and Z, so they can then be verified. And then obviously, I guess there's a level of trust between us and the fund managers that we're not just sending them gobbledygook, but we're all kind of auditable. So all of our kind of platforms have the right to audit us and make sure.
So just so I understand that a bit better, so do you believe your growth route to market is the platform or call it custody, or would it be the fund management group themselves?
The platform, because the fund managers don't know who their investors are either.
No. Okay, thank you. But fantastic. I'm loving it. Loving it.
We appreciate that.
And it's great to see it in action, isn't it? And that demo really helped bring it to life. Helena, you'd asked a question about D2C, but has that just been answered? Yeah. There was another question about routes to market. Emma Napier, advised distribution. Do you want to ask about that?
I was just letting the dog out. You caught me.
Oh, sorry.
Time. I apologies if I've missed something, because it's the first I've heard about it, so it's a great session. Thank you very much. But I was interested in what do you see, or how do you see this playing out in the advised space, or not? I definitely see the advantages for pension schemes and, in my head, D2C propositions as well, because people are investing in these things and there's a reason why they would want to engage further and understand what they're investing in and how that's playing out, all that sort of stuff. But is there any appetite to invest in the advised space at all?
Yeah, so we definitely we haven't focused on that yet to start off with, but we definitely have some really strong conversations going. We're going to run some pilots, I think, in the wealth management, you would call that, I guess, the kind of investment management space where people are financial planning is taking place and someone's investing discretionary on someone's behalf, but they want to be able to kind of report and demonstrate to the investors, who obviously are the kind of end client who's interested in environmental, social governance, that they are invested in the right companies that investor would be pleased with, and also giving them a voice, obviously, especially if they got more money, they're more aware of issues, as Heather was saying, but also they can have a lot of impact because they're like kind of potentially quite significant individual investors, as opposed to most people in pension schemes, which are not, or who are not. So yeah, I think it's interesting because what obviously we don't really want to do is create another process for financial advisors to have to kind of deal with. And in the pension space, it's all, and in the retail space, it's all direct. So it doesn't create any more man hours or woman hours for someone to have to deal with. You know, it's all automated. They place their vote preference in the platform, they get their response in the platform, no extra conversations have to be had, there's no real extra burden on customer service. But making sure that we have that same dynamic playing out in the financial advice space, where people expect, you know, to be able to have a conversation with a financial advisor about something. We just need to make sure that, I guess, we fit into those processes and don't create more work. I'd be really interested in your thoughts about the application. I guess there's people here that are experts, and I'm not on the kind of wealth management side of things.
I don't know if Caroline or Helena, if you'd want to comment on that. I mean, I think one of the things we've seen over the past year is that the floodgates have really opened in terms of advised customers' digital engagement with their investments, and you know, the use of client portals and all sorts of other things where this stuff could be potentially integrated has risen. But I'd be interested. I don't know if Helena or Caroline, if you'd be interested in giving a view from an advisor firm.
I think clients would love this, because even just having the logos of the holdings they have, you have no idea how much fact sheets are the worst thing in the world. I think they shouldn't ever be issued to clients personally, but this is much more engaging. If you think about what we're struggling with at the minute, especially with younger clients, they misunderstanding what investment is about. I think this is a brilliant way of just reconnecting. What is it about? What are you trying to do? What is the long-term impact of what your money is, rather than the fun, fast and easy things that we're seeing. So I think this is, I think clients would love it, but it'd be interesting to see how you bring that out to advised clients, because if it's on platforms, how would that be rolled out? If it's just within pension schemes, it's going to be limited. So is there plans for it to be brought out more widely? How would that work? Is what I would be interested in knowing.
Yeah, well, I mean, at the moment we do quite a lot of kind of standalone work. So that platform that I showed you, it can exist on its own and have kind of data put into it. And I guess, yeah, I definitely think logistically we could make it work. It's just, and it's interesting to think that you know, advised clients would be interested, because we have had quite a lot of conversations with people, with financial advisors who are specifically really interested in ESG or really interested in like impact, and their clients are specifically really interested in that. So obviously there's an application for it there. It's just a question of, you know, is there an application for it in a wider market? Because I guess that space is still relatively niche, I assume, growing maybe.
Caroline, is there anything you'd want to add to that?
Yeah, absolutely. I mean, it is absolutely a growing area, and I think I agree that clients would really engage, because it's the whole kind of topic of sustainability and planet, and you know, how things are done and how we all have to change. It's right up there, isn't it, at the moment? And people are taking far more interest, I think, than they have done before. And to be able to link this with a portal, I mean, we use Money Info, but to, you know, just thinking it through and being a client being able to go on, see evaluation, but actually see far more than that. This type of information, it's not easily available to the kind of individual client, but I think they'd probably far rather see this than some of the data that they would get on one of the bog standard fact sheets. And I think actually from this will drive momentum as well, in terms of the responsibility that everybody has to improve, you know, and be more accountable around just what needs to change. So yeah, I think it's a great concept, and the timing's perfect actually, but it would be good to be able to put it in front of clients via ourselves as a distribution channel, but also being able to offer it outside of pensions, because it's almost like you're going to give them that, they're going to get excited you know, over here, but then they still can't get access to the same level of data over there. So it is part of the plan to open it up more widely, I think.
Right. Clive, you'd asked a question a wee while ago. Would you like to ask it of Georgia?
Yeah, it's trouble, as you know, I see the complexities. The biggest problem I see is the ESG has taken off in institutional investors, because most institutional investors are the likes of the pension schemes, who've got a legal obligation to look after their members as they would wish, and they can make informed decisions because they're very informed buyers. You go out to individuals, you get into the hairy areas. People don't know what's good for climate change or what's good for gender, etc., etc. I mean, the Boohoo example is a great one. Boohoo share price is near an all-time high, which is terrifying, being as the whole proposition is absolutely not sustainable. Forget the labour problems, which are bad enough. Another one is Tesla. Tesla is probably one of the nastiest companies in the world. If you look at the way they mine nickel, the way they mine cobalt, the way they mine rare earths, the labour issues that are horrific, the environmental issues, the way stuff's dumped in the sea are horrific. The whole issue about electric cars, nuclear versus gas versus coal is another one. My favourite probably at the moment is animal testing. Oh, animal testing is terrible. Fine, we don't have any COVID-19 drugs at all in that case. So it's that conflict of what the individual knee-jerk reaction is to more informed judgment, which fund managers, if you must have fund managers, I wouldn't say you don't have to have funds, can work with. And that works in the institutional world. To make it work in retail world, Georgia, I mean, I think what you're doing is absolutely super. I'd just like to see a layer on it of better data being put. I mean, data is the major issue everywhere, because the data companies just lie or don't say anything at all. If we had better data to inform people, to me, that's the way to go. And it will happen by law. It's happening because of SFDR in Europe, TCFD eventually here. We will get better data. I just don't think we need, in a way, we shouldn't jump too far too fast, because I think there'll be disappointments. Also, the one issue I haven't mentioned is performance. If you take out Tesla, for example, Scottish Mortgage Trust wouldn't look that good without Tesla in it. So that's another factor. Enough said.
Well, you make interesting points, and I think, I mean, yeah, the debate on Tesla is definitely still out as to whether people will that will pay off or not. But I guess I would definitely argue back that fund managers are kind of good at making decisions. I think if you look at the track record of BlackRock's voting, you would really question whether they understood climate change.
No, I didn't say. No, I said the trustees are making decisions and telling fund managers what to do. I never said fund managers were going to make decisions. Some are okay, some are.
Okay, yeah, fair. Well, I understand, and we work with some great trustees who are very engaged, and I think what we would like to do is, at least, you know, specifically in the pension space, in the retail space, is a bit different. People are picking funds; they should be able to hold their fund manager accountable, because, you know, stewardship should be part of the reason why someone picks a fund in our I guess in our understanding, you know, how we think about it. In pensions, someone has a trustee who's kind of stewarding those assets for them and making decisions on their behalf. I totally hear you on that, and you obviously work with a lot of trustees, so you know that's a pretty important point to get across to members. But a lot of trustees definitely at the moment do default to fund managers, and they don't have that much transparency about what their fund managers are engaging on or how they're voting. So we're actually bringing quite a lot of that transparency to trustees who don't currently have it. And I suppose rather than giving the individual pension members, you know, a vote on every single issue, when, you know, we're not looking to create a referendum on every vote, and pension members don't really want that. We are able to inform the trustee of, like, this is what your membership really thinks is important. And to be honest, if the trustee completely disagrees, that is fine, but at least they can then communicate that to the underlying investor base if they have a good argument for it. And that's the same at the fund management level. You know, if there's a really good reason why a fund manager doesn't want to vote for a climate resolution, which sometimes there is, that's okay. But if they've got that good reason, then they should be happy to share it. And that, I guess, is really the position that we're coming from, rather than saying pension members should be in a position to dictate, which, you know, I agree, I'm not sure that is the most sensible situation. But also, until we start engaging people, like it's a bit of a catch-22, because we can't have this perfect system where we've got millions of really well-informed pension members who are able to make decisions about the minutia detail, or even like where they should put their money or where their money is. Until we start to engage people, we can't hope to increase the level of financial literacy. And if you just throw data at people, it's not what you're suggesting, but in a crude way, if you throw data at people, they don't engage. So we have to strike a really difficult and careful balance between giving someone something that's interesting enough and trendy enough and topical enough that they bite, and then giving them enough information that whatever they say is meaningful, but not saying you have to also read this Sustainalytics report before we'll take your opinion seriously, because then everyone's going to leave and then you don't get engaged pension members. So I totally hear your point, and I think that Tumelo is not this perfect solution that's going to get really perfect opinions from a membership base that should be acted on immediately. But I think solutions like this, and there are others, you know, Money Hub's doing a great job at engaging people, and I'm sure other people here also are working on this problem, that we need to just increase financial literacy in any way, and then hopefully we get to a place where, you know, then people can be trusted to make more informed decisions. Then definitely fund managers will sometimes throw that back at us. They'll be like, why would we want to get insights from Daily Mail readers? You know, I've heard that comment loads of times. Sometimes they call them the great unwashed. But I mean, yeah, we have to start somewhere, right? So which is normally my response. Not all fund managers, some of them.
You have to start with your clients. That's who the clients are. So it's it's a great place to start with the client. Elaine, you'd had a question. I've got time for two more. So there's loads of questions, which is great. But I'm just going to take two more. Elaine, did you still want to ask your question?
Yeah, it was more about fund managers engage with companies out with shareholder vote time. Was there any opportunity for you to engage with fund managers further about telling them what your clients are looking for from them?
Yeah, absolutely. So that's basically, we've started with quite a simple concept, which I think has some flaws, which is shareholder proposals. It's quite reactive, it's quite binary. It's not always that relevant. So yeah, absolutely. The challenge with engagement is that it's very opaque, and fund managers meet companies and they don't report it anywhere, and it's really hard for us to get that data onto the platform, which is why we started with voting, because obviously it's much more transparent. But now that we have stronger relationship with fund managers, we have started to pull some of that information through. So for example, we have asked users, like, hey, your fund manager, Elgin, is meeting Twitter, BP, and Facebook in the next month. What's the top questions you've got for those companies? And then the top voted question got asked by the fund manager, and the response got sent to the users on the platform. So that's just like an example of a feature where we're trying to just open up that communication. So yeah, it absolutely doesn't have to be about voting, and that's a good point. But we have slight struggle around just the transparency with engagement, and there's just not great processes in place at the moment for recording that. And obviously, as a data company, what we ideally want is nice fresh data sets that we can just upload, and that obviously doesn't exist, which is slightly problematic.
Yeah, and there are so many meetings.
Yeah, that too.
Yeah, that's a really, really good point. Last question for Gillian, because she wants to talk about the money.
Oh yeah, sorry. Always a boring person. Look, first of all, Georgia, I just want to say fantastic. It's just an amazing journey that you've been on. I think congratulations to get to where you've been in terms of a business startup. And I also really appreciate your honesty in terms of where you've had to do, 180s and found that the business sometimes has a life of its own, if that makes sense. Yeah, and you go in a different direction. But clearly, as an ex-business owner myself, it's always interesting to understand where the funding comes from. So presumably your business model is it the asset managers or the platforms that you look to in terms of supporting this?
So at the moment, the business model, so maybe we'll do 180, but at the moment, the business model is that platforms pay to integrate with Tumelo.
Okay.
So you pay a subscription, like it's basically software license fee.
Yeah. Okay. And have you thought then about approaching the asset managers who clearly get a significant amount of benefit, or could do, from what you're doing?
Yeah, I guess hence my at the moment comment. The platforms really see the benefit in it because there's a very short-term effect for them, which is engagement with their users. So it's a much easier conversation for us initially. At the moment, what we're really trying to do is get fund managers on side. And some of the fund managers they ask us how much the data costs. And that's like one of the first questions. So they're clearly thinking this is something that they're going to have to
I am one, which is why we ask these questions.
Okay, great. So we know that is a potential, but we don't want to put pricing, we don't want to put like cost in the way of fund managers adopting this as something that they use, because at the end of the day, if you're a member voting on the platform or an investor, if the fund manager doesn't get your data because we charge them for it, it just doesn't, it doesn't really work. So I guess long term, hopefully asset managers unanimously agree that it's valuable and that's something that we can kind of push forward on. But at the moment, we try and keep it simple.
Sure. Thank you for that.
Fantastic. Thank you, Georgia. Thank you for so much participation, questions, comments. It's an absolutely fantastic discussion. Before I pass to Sam, just to wrap up, there was a few things I noticed. I thought the point that you made early on about the obligation within workplace pension to take into account the views of the beneficiary and to be able to report on that was a really, really interesting thing, because when there's an obligation to have to collect this, then you're going to see a huge amount of momentum behind it. So that's a really powerful thing that I'd not been aware of before. Your points around the topics that will engage people, and we heard that from Jill Jackson at the last session, focusing on those things like gender equality or environment, and you at Tumelo allowing people to choose, set their preferences. I thought was a really, really really interesting discussion. There was lots of talk about that this should just replace fact sheets. Let's just get rid of fact sheets. This is what we need.
Pricing is important, and we don't deal with pricing at all. So there's that, a lot of people talk about price transparency in funds, and I guess that's something that we don't touch. So that's also important. But yeah, fact sheets are a bit crap, aren't they?
just a bit, right? Ellen is like, yeah. There's definitely an opportunity in retail, lots of interest and excitement tonight. So so I think the next year is going to be even more exciting for Tumelo, if this is anything to go by. I was listening to my favorite podcast today, Masters in Scale, with Reid Hoffman, who's the founder of LinkedIn, and he was talking about something completely unrelated to this, but there was a quote that I thought relates to this really well. And he said, a healthy, stable, functioning society where people trust the mechanisms of society to rule. Oh gosh, I can't even read my handwriting. But it was the idea that getting people engaged, getting them to participate, allows them to trust the institutions, and that is pro-democracy, and that is pro-business. It's good for business. And the thing I think that sometimes gets lost in this discussion is actually getting people engaged in this. It gives them confidence in the systems that society is built on, and leads to trust. And some of the I think you're dealing with some really, or helping to solve some huge societal challenges beyond just driving shareholder engagement. So well done, hats off to you, and congratulations, as many have said, on the success so far. Sam Seaton, can I pass to you please, to set us up for next meeting?
Yes, you might need to go on mute though. Oh, it's not echoing at the moment. Oh, well, hang in there. So look, we're out of time, but just Georgia, fantastic. I am aware, but it was lovely to hear it all again. I wasn't, never dull. And I'm such a fan because, Georgia, one of the things I would say that she's doing, which I'm so, behind her on, is, about the transparency in the industry and about actually elevating. I find it incredibly frustrating that people today have no idea where their money is invested. So, fundamentally as an industry, that's something we've got to crack. And George is doing a really good job at elevating that kind of, transparency connection. And so I just a big fan. So thank you. But next month is Helena is going to bring her inspirational view on the advice gap to this group. And the reason I say it's inspirational is because I have met, through my career, and worked with many advisors, but I was at a session with boring money. And she was, you know, it was a fantastic session. And I was just, I made a note of Helena's name at the session when she asked a question, because it was just, you know, such a brilliant question for, well, I didn't actually realize Helena was an advisor. For all I knew, she could have been a lawyer. I had no idea what Helena was, but basically the question that she asked, you know, and the way that she went about it made me make a note. And afterwards I picked up with her, and that's when I was really impressed that actually Helena was an advisor who wanted to do the right thing by her customers. And as we'll all know in this session here, that isn't always how the advice industry has been set up, especially for me when I worked with the banks and the bank assurance and that kind of world. You know, it's quite a revelation to me that sometimes the customer really wasn't important in the scheme of things at all. So, and Helena's very, very, A, customer focused, but B, also very concerned about the advice gap, which I imagine all of us here are. So that's what we're going to have a session on next time. So bring your advice gap hat to the table next month, and hopefully we'll enjoy another wine in lockdown for a little bit longer. And
just to note, it's the 12th of May. Same details.
Thanks,
Perfect. Thank you, Georgia. Thank you, everyone.
Well, thank you so much for asking questions, and that was really fun. I appreciate it. Nice to meet you all.